Hello, Warriors. Coach from TradeGATEHub.com, and we're sponsored by TradeView Markets. I'm going to start off talking about cable. That we have a big week ahead with the CPI tomorrow, Fed on Wednesday, BOJ later in the week. So take it one day at a time. You do the right thing today, and tomorrow takes care of itself. So I want to start with something new I'm doing. I shorted cable this morning, right up around the 26 level, wrong over the high, the move with tolerance about 40 over the high so far, and willing to take partial profits. This cable has divergence on multiple time frames, so there's your daily, never confirmed up at the highs, but I could go start at the 4-hour, and as you can see on the last drive up here, we were at 70 or under 70. So you go a little shorter term, you go to a 2-hour, and you could see again, right at the 70 level diverging. Let me just adjust this a little bit. Yeah, there you go. So now you could see it. Pretty nice little 3 drive there too. And, I could take it all the way down to the 15-minute. And I believe you have some divergence there too at the high. So diverging on multiple time frames. Looking at it for right now as it is a potential failing rally from what we had in early May. And if we had something similar, I think you could see 23, maybe 20. And if you get long term, and this is building a major top for this correction, and when I talk about correction of the correction, I'm talking about this full big move here that we've had that we could be completing and correcting that could take cable down under 18, maybe 61.8 at 112.50. So short cable stops over 40 pips over the high. Last week I left you with I bought Euro on Turnaround Tuesday, and Turnaround Tuesday was right here, down in here, and took some partial profits. It's having a lot of trouble just getting through 107.80, but I'm going to stay long since I've taken partials, and right now I'd have another 87 pips. I'm willing to risk about 70 of them, and I'll stay long as we're above 107. Looking not only to liquidate if we get to 108.5, but to reverse out up there. So that's a story with both cable and Euro. So currently long Euro, short cable. I look at the end here, and to me, that's a formation. Looks like a triangle, which actually implies that we could have one more push up above 140. I talked about it last week. It didn't happen yet, but we haven't broken down either. So we're still above the 138 breakout. And I'd say if we hold these lows, last week's lows, you could, if you want to be long, it's really neutral. You should wait for either a breakout or a failure. But if you're trying to get the edge, you have to have your stops under, say, 138.75, or you want to give it more room, it would be here under 138.40. Potentially we get this 141 thrust, which could be a terminal thrust in the end. Silver is giving a lot of it back here. I know we had a nice rally when the yen was coming off and the dollar weakened last week. To me, I still think 22's in the cards. There's a 22. This looks like a rally right back to the major breakdown at 24.5. We're headed lower. Gold popped too, but given a piece of it back, still stand by. We're going to get at least a test of this 1918 level, the breakout line, and I could even go a little shorter term. There it goes. So, you have that breakout line coming in. Let's draw it off here. I think it came in around 1920, 1923. Otherwise, I'm still going to maintain my not long-term bearish, but short-term bearish bias. Just want to show you something, guys, that the silver shares when silver was exploding last week, look at what happened, say, this ETF, SILJ. Here's AG almost at new lows. Some of the stronger silver also is given an awful lot back. It makes me think, where would these shares be when silver's 22 or even 20? And here's another example, Fortuna. So the silver shares, the miners really never performed that well. Even the golds with, silver way outperformed the gold. I mean, look at what happened to the XAU last week. I mean, the gold silver ratio, you have it right here. It fell apart with silver outperforming by a long shot. See that big break, and yet the shares couldn't do anything there. The big chart for the week, as far as I'm concerned, besides what I'm doing in currencies, is a 10-year yield chart. And I'm going to leave it here because, as you can see, we have a very important pivot at the 360 level. Just fix this. Okay, if you look left, you see 360 was important. I talked about this breakout over 360, that we could go to 390. Then I talked about it pulled back to the breakout and held, and we've made another run up towards here. If you're a classic technician, though, you would look at this on the weekly and just see what happens. On the daily, let's look at this. And this would be considered a descending triangle, okay? Going back to the highs of the move. So pay attention to this 360 level for, this reason. It may give you an early indication that we're going to be breaking down. And if we break down under 360, 330 is the next target, and you break down under 330, you're going to be looking at rates maybe around 2.8, 2.9. So definitely important to watch this descending triangle that we have developing here. If the Fed does pause and they try and rally the bonds, and that it might just be, or they try and take the bonds down, it may be a move to fade. If people try and sell off the dollar on a Fed pause, even though the people are saying it's going to be a hawkish pause, I'd be looking to buy the dollar, especially if it gave me a nice little break back down towards this 102.5 level, 102. But it's very possible we're already putting in a low here, and we're going to start heading higher up to 105. So those are the markets really to watch. S&Ps, people are now talking 4,400. We almost got to this blue line that I've been talking about for a while. You can see it right there. It comes in around 4340. People are now talking 4,400. People are saying we're going to have a melt up. People are saying we're in a new bull market. I believe Barron's had the new bull market has legs. Be very careful with longs. And, if the S&Ps are making new highs and your stocks aren't, that's something to consider. And we all know it's concentrated. So the bear's argument is breadth is lousy, is concentrated in few stocks. The bull's argument is that it's going to broaden out. And I still think that we're in the middle of a banking crisis. Bitcoin doesn't think so because it looks like it's rolling over. But if you look at the regionals, we have two drives on the regionals. Let me just show you this, and you guys know what I look for on the regionals. On charts, I mean, it is Monday. I look for a 3-drive formation. So here you go. Here's the regional bank index. So, we've had 1, we've had 2, and we could end up having 3 here. So taking it down one more time. And you could say, well, you know, Dale, that's just the regionals. But if you look at the majors that are the beneficiaries of flight capital only wanting to be with the big banks now, if I could find the XLF, it's no trip to Hollywood either. Okay, so the market's making new highs and the XLF can't even take out its April lows. This to me looks like bearish consolidation after a big break. So I'm still of the mind that we're in the midst of a banking crisis. Back in 08, it took several events before the market hit the tipping point. Started out with Washington Mutual. I was talking to Pedro DaCosta today, and went to Bear Stearns, and the market still held together, and it wasn't until the Lehman moment. So there's time lags. Yellen's talking about more consolidations in the banking industry. To me, that's code for failures. So good luck this week, everybody. If you're interested in uranium, I have a guest on Wednesday that specializes in the uranium market and their shares. Join us then. And Mike will, I'm not sure if Mike's going to be with you. It's pretty busy, but Mike and I will be back tomorrow at 11 a.m. Eastern time. Join us in the room and learn. Good hunting. And remember, don't just count your pips, count your blessings.